if I had $1 million of Bitcoin and my choice was to sell $100,000 of it to pay my living expenses or borrow $100,000 against it at 6% or 7 or 8%, I would probably borrow the 100,000, pay the 8% and keep the $1 million of exposure, then sell it. Because in order to sell it, you would have to actually sell, in some cases, up to 200,000. Like if you live in California and you have $1 million of Bitcoin, you would have $800,000 of Bitcoin the next day. You would pay 100,000 in tax to the state of California. You would have 100,000 to live on, and your stack would be reduced to 800,000. If, on the other hand, you were just to borrow 100,000, you would have a loan to value 10%, and you would incur $8,000 in interest over the course of a year, and you would have $1 million appreciating at whatever Bitcoin appreciates at. So if Bitcoin appreciates at 20%, you'd have 1.2 million the next year, right? And then you could do it again. You could do it ad infinitum, right? At that level. So you just have to be able to stomach the volatility. The way you stomach the volatility is you keep your loan to value really low. If you're a dentist or you have some kind of business, finance your cash flows. Like you have a business, right? If you can sell equity in the business, that's a way of financing the business. And if you mortgage the business, that's a way of financing the business. And both of those have the benefit of not being marked to market loans. Well, let's take the extreme. What if I offered you $1 million loan for 100 years on against your personal signature, and the interest rate was 3%? Would you feel it's risky to buy Bitcoin with that? Like, what's the worst that could happen?
Not much.
Nothing, right? You'll be dead in 100 years. The worst that could happen is in 100 years after you're dead, the Bitcoin is worth less than $1 million, right? See, small chance. Maybe you can come up with some way. Bitcoin goes to zero the day after you take the loan and you can't pay the 3% interest, then I guess it comes due. So slight risk of owning the Bitcoin. But you see, as the term of the loan extends, as the interest rate falls, and as the collateral changes, debt goes from being debt to being equity. What if I just gave you the $1 million forever and no interest rate and no redemption rate? That's equity, right?
Yeah.
Would you take that and buy Bitcoin with it? Why wouldn't you?
Yeah.
Like if you're a dentist and your dental practice is going to appreciate it's going to grow 5% a year. You're going to grow your top line 5%, your cash flow is 5%. And someone said they want to invest in your dental practice and buy half of it and they'll give you $1 million. Would you give them half of your upside and then take the $1 million and invest it in Bitcoin, which you thought was going to grow at 20% a year for the next 20 years? You see, in that particular case, what you're doing is you're diversifying your portfolio from a cash-rich value stock, right? Your cash practice to now a property portfolio. So I think when you're really thinking about financing, the question is, what kind of money can you raise and what strings come attached to it? And it's different for everybody, right? It depends on what country you live in. If you live in the US, you have Fannie Mae and Freddie Mac, and you need a car, you can pay for the car in cash, or you can borrow money at 2% interest to buy the car. Well, everything is a choice of, do I own Bitcoin or not, right? If I pay for the car in cash, it's like I paid for it in Bitcoin, right? It may be worse. It may be like, if I pay for the car with Bitcoin, not only did I pay for the car, but I paid for it twice because I got to pay tax on the Bitcoin if I own the Bitcoin. So the worst case would be to give up 100,000 in Bitcoin to get a $50,000 car. The next worst case would be I had 50,000 in cash. I could either buy Bitcoin with it or I could buy a car with it. And the best case would be I bought the car for nothing and I accepted a 3% loan against the car that I pay off over 7 years, and I kept the Bitcoin, you see, or I bought Bitcoin. So ask me a question. Would I rather borrow money at 3%? Sometimes, by the way, you can borrow money at like 0% interest to buy a car. Have you noticed? Like if the dealer has a subsidy sometimes the dealer will subsidize the loan and they'll give you a no interest loan or a 1% loan to buy the car. So, Mike, should I borrow money to buy the car, or should I pay for it in Bitcoin? And not invest Bitcoin? The answer is, I think I would take the loan. I would take all the credit you would give me, and I would maximize the portfolio. I think the general principle, if you step back, is in an inflationary environment, right? If the inflation rate's 15%, the monetary inflation rate is 15%, and it's at least 15% right now. If the inflation rate is 15% and the cost of capital is 5%, and you have a use of proceeds, if you've got a property that you believe will appreciate faster than 15%, let's say 30%, right? Then all day long, what you would do is you would take on debt and pay the 5%. You would invest the capital into the property yielding 30%. You would scrape the 25% arbitrage. And the only thing you would spend your time focused on is, how do I negotiate the terms of the loan so I don't get forced liquidated by a capricious lender? Like, if you could buy a house and the house was a 3% mortgage, and you could either pay for it in cash or pay 3% mortgage in an inflationary environment, you would probably take the mortgage, right? Probably. Now, what if the bank had a clause in the loan that said, every month we can send an appraiser to your house, and if we think that your house is worth less because it got struck by lightning, or your neighbors moved in and they blare loud music, or because the mayor instituted lockdowns in your city, if we think it's worth less, we can mark down the price of the house by 25%, and then if it gets marked down below the value of your loan, that we can call the loan and you owe us the principal immediately on demand. Now, would you take the loan?
No.
Yeah. So the problem is the terms, not the loan, because the exchange could mark down the value of your collateral while you're asleep based upon a manipulation and force liquidate you and take your life savings.
Yeah.
It's like you went to bed and Bitcoin was 49,000. And during the night, it traded down to 16,000 for 13 seconds. And then the exchange force liquidated you, and they took all your money and sold your Bitcoin at 23,000. And you've lost everything. And now Bitcoin is trading at 59,000 again. And how do you feel?